Good day. This is the Eye of the Storm podcast with the weekly update for the S&P 500 being recorded on Saturday, June 15th, 2024. Again, as I started with the NASDAQ, I'll also start here with the S&P. It was a very interesting week, in fact, a very active week that included some very strong earnings reports, included also the Worldwide Development Conference from Apple. It also included some strong earnings reports from Broadcom, an additional move higher to new all-time highs post-split in NVDA, and also just some counter to action. And what I mean by that is that the Dow and the Russell really beginning to pull back, and we're declining a little bit greater speed or intensity than the NASDAQ, which then partially held the S&P higher, although the S&P did end up, at least versus the futures market, ended up at 5,500. Now, starting here in the cash market, what do we have going on? Well, we remain in the process of moving higher within a primary fifth wave. That primary fifth wave will consist of 5 waves of intermediate degree, of which intermediate 1 and 2 are complete. The market remains in the process of moving higher within an intermediate third wave. Intermediate wave 3 will consist of 5 waves of minor degree, of which we have minor 1 and 2 complete, and so we're still within minor wave 3 of intermediate wave 3. And as we know, it's a 3 of 3 move, so it's going to be the longest, it's the strongest, and it has held up to that classification as this third wave really just continues to extend higher. Now, inside of minor wave 3, there are 5 waves of minute degree, of which we have minute 1, 2, 3, and 4. So that puts us inside minute wave 5. I'm going to come down right away to that 4-hour chart. So we're going to take a look at inside minute wave 5. So let me just bring this in just a little bit. Minute wave 4, there's the end. It was the mid-April, so the April expiration low at 49.53. That was it, basis to cash, 49.53. And from that level, we have started to move up in minute wave 5, which will consist of 5 waves of minuet degree, which we have 1, 2, 3, and 4 done. So that puts us inside minuet wave 5 of minute wave 5 of minor wave 3. So we're getting pretty close. Now, within minuet wave 5, it'll consist of 5 waves of sub-minuet level, of which we have 1, 2, 3, and 4 complete. So in my estimation, in my opinion, we are within a very short climb of reaching the ultimate top for minor wave 3. And so after minor wave 3, we get a minor fourth wave correction, and this happens to be the area that we're going to be looking for. And then we'll finish the minor wave 4, go back up to another new all-time high in a minor fifth wave, which will then complete the intermediate third wave. And then we will drop again in an intermediate fourth wave, and one more time, go running back up, creating additional new all-time highs in an intermediate fifth wave, which will then complete the primary fifth wave, and the one up would be the cycle wave 3. So we still have quite a bit of upside movement left to do. And if we're poking on 5,500 now, it's not going to be out of the ordinary or out of the picture for the S&P to start touching that 6,000 level. Now, that level, back when I was counting this as the probability of it being a primary B wave, which is what I initially said, if we had that high in January of 2022, completing cycle wave 3, about a month ago or so, maybe even a little bit more, because I ran both the preferred and an alternate count, and the alternate back then flipped over and is now the preferred count. And so working with that, we have surpassed that 1.382 level, which would have kept that primary B wave alive, and that's now been surpassed. And now we're just going to have to finish up that larger pattern being that primary fifth wave. Now, where are we within all of this? I believe that we're very close to completing this minor third wave. So let's take a look inside. Minuet 1, 2, 3, and 4. So we're in minuet wave 5. And here we have sub minuet 1, 2, 3, and 4. So we have sub minuet wave 5 left to do. So let's bring it down to the hourly chart and take a look at what we got going on. There's the 3, there's the 4. Is this just a 1, maybe even not even completed? So again, we continue to have to count 5 waves up to complete that fifth wave, to complete this fifth wave, and then to complete the minute fifth wave, and then again the minor 3. But we're there. We're up into this area. So let's take a look at where the fibs kind of come in on, again, the cash market. So we're relating sub-minuet wave 5, and it gets related to sub-minuet wave 1, and here we have that. So our first level, again, for sub-minuet 5, is 0.618, and that's at 54.72. However, the most common is equality between waves 5 and 1 is equality, and that comes in right here at 55.14. So we still have at least an 80-point, 90-point rally that we can achieve before we get to the 100%. But once again, always what comes first is the structure. And so the structure indicates that we have this wave 5 to do, and maybe we got a little bit more for wave 1 of 5, a small decline, up to a 3 and a 4 and a 5. So at least I would imagine that we're going to start getting to between 54.66, 54.72, and on up to 5,500 via the cash. And we'll go over that in just a moment in the futures market, where the market did actually hit 5,500 close there on Friday on a downtick. We'll take a look at that to see how this all is going to work out. Now, as I discussed earlier, what we do have coming out next week, and again, it is a shortened week. We've got a holiday dead center on Wednesday. It is Juneteenth. It's a federal holiday here in the United States, and therefore, I believe Globex will be open, but our regular session, so the U.S. regular session on Wednesday the 19th, will be closed. And so also being moved is that we have normally a volatility expiration. The VIX has options that expire on Wednesday at the opening. While the market closed, that's being shifted back a day to Tuesday. So we have the volatility expiration on Tuesday. We have a very large expiration in June, on June the 21st, on that Friday. And then we have some PMIs. And so next week is kind of PMI week, I guess. So purchasing managers indexes. And we have those kind of spread out, along with a lot of Fed officials out continuing to discuss our current state within the economy and interest rates, and why we maybe or maybe not get a cut coming up soon. Now, as it relates to last week, again, we saw a lot of movement back again into the strength of the building AI sector, so to speak. So we had NVIDIA move up, make additional new all-time highs post-split, and those are up above 130. I think I got up to 132 at one point, $132. So that equates to pre-split $1,320. So these are new highs for NVIDIA. Then we saw Apple, not necessarily on the day they had their conference. It came the next day when everything got digested, and to realize how strong Apple is moving into artificial intelligence and how it will be utilized within their products. So that would be the iPhone, the iPad, the iMac, and all of that, and how that is now going to be built. So Apple crossed 200. And once it did that, it started to beeline for 215. So that strength of that rally continues to provide some positive upside action for not only the S&P, but the NASDAQ. And so what I continue to look at is I believe that this is all actually coming up because things are starting to get a little bit parabolic, in particularly like NVIDIA and a lot of other markets, that we're going to reach that high. So again, here in the cash, we're looking for it to continue to move higher. And we're likely going to gap again because I think that if I get that correct, yeah, we should likely gap again based on where the ES closed. Now, again, I can't speak for tomorrow to how this is all going to open, but my thoughts are that we continue to move higher. And we have initial resistance at 54, 46, 47, and we've already been up there and we've actually touched above it at 54, 47. So being that that's the existing high, I think we might find a little bit of resistance there, but it should not be a problem for the market to break that, unless, of course, this fourth wave is not complete. Now, if this is all going to be an A, a B, and we still got a little bit of a C, and maybe still have more, then we will likely come down first before we rise and head back higher. But again, cash gets back into action on Monday morning. Now, once we're done and through that, we have the minuet wave 5 at 1.618. That's going to come in. You know what I'm going to do? I'm actually going to clean this one up a little bit, the 1 and the 1.618. I'm going to leave that one there, and we're going to close that. We're going to get rid of that. And where this minor actually came in here, I am going to get rid of that because it's now just kind of hanging out, and it shouldn't because it's been taken out. So we'll get rid of that one. So now that cleans up there. So our resistance is 54.47. And then we have 1.618 for the minuet wave 5. And again, it's kind of going on the structure versus the level. So this level remains, because it hasn't been reached, and it could. Wave 5 could get right up there, be done, and possibly between 54.66 and 54.72. Again, basis the cash. So we have that, and then 100% comes into 55.14 or 15. So that's kind of top side. Now, additional levels that we have here may come into play, but I'm going to be looking at actually the larger ones that are way out. So right now, I'm not expecting this particular leg to get us up much past that initial at 55.14. Now, granted that the sub minuet wave 5, if it goes full bore at 1.618, that's 55.82. But something pretty terrific's got to happen. And I don't know what's left for that to actually occur other than a surprise move by the Fed or something. So in any case, I'm kind of looking for the fifth waves to complete all the way up to minute wave 5 and then minor wave 3. And then we begin that minor fourth wave. And I'm just going to back out to this level again. And being that, and Elliott, we already know that a fourth wave will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. And that's right here. So again, looking for a move with the potential to get back to the April lows, and those around 49.50. So from where we are, it's quite an active drop. Now, let's just kind of walk this thing down a little bit. If we're looking for minor wave 4 to come down into here at some point, and once we get that top in, I will then run just the fib retracements so that we can, for all of minor 3, so that we can get our retracements back down for minor wave 4. But we initially would be looking for it to at least get down to those lows that we saw in mid-April at the April expiration. And then we're going to get a minor fifth wave up again to new all-time highs. And again, once we have minor 4, then I'll be able to run from minor 1 up over to minor 4, the end of minor 4, to get our fibs for a minor fifth wave. When that is complete, it's going to complete an intermediate third wave. We come down again to the area of the low of the minor fourth wave, not yet complete, but where that area shows up and where it actually ends up happening, then we'll be able to tag that's going to complete an intermediate fourth wave, and up we go again. So basically, I think we have two times that we're going to come down towards this area. And that's basically going to be from like 52 down to 49.50, 52.60 down to 49.50. So it's a nice range, and then again, just forward moving, we're going to have a minor fourth wave up to a minor fifth, completing an intermediate third, an intermediate fourth wave, going back up to intermediate wave 5. And then once that's done, we have intermediate wave 5 done, primary wave 5 will complete, and then cycle wave 3. Now, how long can that take? Well, we're getting ready to finish this end of the second quarter, coming up at the end of June, and then we're moving into the third quarter. Will it take third and fourth quarter? Very possibly, or even sometime in between. But I don't necessarily think that we're going to be shifting out into 2025 in the context of a continuation of a strong rally. It may, I can't say for certainty or 100% certainty, it certainly can, but I think we got enough things brewing, enough things going that kind of pull us up to a high. We have the election in November. We have the Fed basically telling us that, oh yeah, we're likely going to have some, or at least one cut before the end of the year. Okay, so we have September, we have October, and we have December. So we have, those are the larger meetings. It's like, okay, so that's when this may or may not happen. We're going to go on that theory. So as soon as we start to get rate cuts, I think then we're going to be in a different situation, and then we'll take it out then to see where we are, what's going on, and what's happening all around us. But we have different areas where the market could put in these highs. Now, what we have going against that is we have a continuing serious situation in the Middle East, and another very serious situation that is now brewing even harder between Russia and the West, and Russia and the Ukraine. That's what the war is. And so there's a lot of posturing, there's a lot of activity, there's a lot of just flexing of military might being done by Russia. Now, also in that, there's been a new round of sanctions being placed against China for assisting Russia with military aid, or just assisting Russia as it continues to battle in the Ukraine. So that opens another door where how will the Chinese react to sanctions being placed against them economically, and what will their reaction be, and what could possibly happen? Well, we know that China's been like rattling its cage to say that Taiwan has always been a part of China and they want it back. Primarily, could that possibly do should it occur? It's going to create a very destructive chip market, because where they could just shut it all down real quick. And what does that do? Well, that sends artificial intelligence and a lot of other things that are dependent on the chips right over the edge. So again, not saying that that's going to happen, but it's out there. It's out there, and these are things that actually will come into focus as we begin to continue to move forward. Either they resolve without anything coming negative, or they kind of blow up. So again, moving forward, I do expect that this market is going to get up there and it's going to finish all of these fourth and fifth waves. So we have a minor 3, minor 4, minor 5, intermediate 3, intermediate 4, intermediate wave 5, cycle 3. And then we go into a much stronger, like I've talked about previously, I'll talk about again, then we'd be looking for a much larger correction, and plenty of things that could just really create that and carry it forward. So SPX, moving averages, still looking pretty good, and still in force to kind of move higher. We're looking here at that 4-hour again, and we got it right here. You can see they're still pretty much very angled higher. So there's the 13, the 20, the 50, the 200. Even the 200 is now picking up that that slope. It's not flat, it's moving up, and it's moving higher on the 50. So these continue to suggest we have not reached that top just yet. Once we do, we'll start to come down. We will be breaking below the 13, breaking below the 20, which is the more important one to start, and then heading. And they will then start heading lower, and then it'll actually, then we'll get a clearer picture as to where we are. Now, over in the S&P, pretty dynamic. We're not going to go back and go the whole thing because it's the same count. So there's minute 3, there's minute 4. Let's open it up on the 4-hour chart and take a look inside. Well, we see that we've gotten up to actually that high on the 13th. So on Friday during the Globex session, 54.52.75. And actually, why they're marking this at 5,500 because it's September. So Thinkorswim is rolling out to September. And right now, I'm still dealing with the June contract, even though it's actually saying September up here. So starting on Monday, because that would put us up at the 55 level, and that's up here. And I am showing this guy. Yeah, it should actually be showing more, but it's not. I'll wait and I'll see. So we're going to get that gap on Monday via this. It always gets strange right at the contract roll. So with it at 5,500, that wasn't part of the June expiration. The June did not expire at 5,500. I apologize for not looking to see that it was September. So again, we're going to get a gap when we're going to be starting higher above at 5,500 or above. So I will make adjustments once I get that chart is up, and then we will be having these adjustments being made to where the market can get to on a futures basis. For right now, a little bit more difficult because I need to get that once the roll happens. So in other words, once it's a continuation chart, and I need to see them make that adjustment all the way up so that I can move, put the fourth wave where the fourth wave belongs. So I think that will happen again tomorrow into Monday, and then we'll be able to move it up, and then I'll have different levels here and here. Actually, all of these will change, be reflective on the September contract. Right now, I need to wait for the chart to actually transfer them over. So it's hard for me to say right now, but let's just say, for example, that what we have is resistance current basis the June contract as at 54.66, 54.90, 55.08. And that would be an area that I'd be expecting the market to get to. Let me just go over here and do this. And we're going to take a look at the futures market so I can see what the difference is between them. It's about $35 between June over September. So September is about $35 above, 34.5, somewhere in there. So back over here, and if I'm going to add $35 to this level, then what we're looking at is 55.43. And so we can just take them up that way. So maybe 55.43 is where the market will likely complete this small fifth wave, and this fifth wave, and this fifth wave, and this fifth wave. So we've got a lot completing up in this area. And I'm looking pretty much that the market should start and turn and head lower. And that is, of course, unless this fifth wave really also decides to move much stronger and gap and just kind of extend this fifth wave even more. So it'd be the fifth of the fifth of the fifth that would extend yet again. It's possible. Let's wait and see what can happen. And that truly is about it for right now. I think we're at that closing point. I got to let the contract roll. I got to let the market fill in. I have to let the system make the adjustment so that my wave pattern and my count will transfer over to a new chart. and then I can make the adjustments to the levels. All right, I'm going to finish it up there. The next Elliott Wave Daily will be on Monday, June the 17th.